a very boring subject. So people always, in my school, I had my friend who said that you write mathematics exam because you write my mathematics exam. My college friend told me that I can't clear more than 35 in mathematics. So maths has always been a very, very tough subject, and when it comes to maths, when it comes to investing, it all involves number. And we all know that we need numbers in life. So today, the first session that we have is something called as Housie, Prizey, Quizy. So what we are trying to do here is that we are trying to learn some concepts of finance in the game of a Housie. How many of you have played Housie game, right? So what happens in a Housie game? Somebody picks up a number, and if that number is on your card, then you circle it, and then there are prizes for it. So we are going to play a similar Housie, something new, what you didn't knew half an hour back. So let's begin. So you all have a sheet of paper. Anybody who doesn't have a sheet of paper, please raise your hand. Somebody from Team Happy Investor would arrange this for you. So these are the rules, and I'll explain this, but a question paper appears, you need to think of answers and make a guess, and again we will reveal this answer for you. And I'll give you some examples before we officially start this game. Is this interesting? So we also have a pen. That's a very interesting pen. This is a takeaway for you. So basically that is not a normal pen, that's a calculator. What does that pen say? If you can point an arrow, there is a pen which says 25k, 50k, 100k, 1 lakh. Let's say you go at 1 lakh, point that arrow there, and let's say you assume 12% rate of return. In that window you will get to know what will be the value of your investment after 5 year, 10 year, 15 year and 20 year. So we have brought this pen for you. You can take this pen after this event. This is for all of you. Okay, and you can use this pen now to answer the questions. So are you ready? So we'll start this. Okay? So, and one more thing, just listen. This is just a game, fun. If two people have a tie, and if we select that she told first and he told second, so the hall is huge, so we may not be able to listen to everybody. It's okay. It's just a game, a fun game to actually explain you, teach you the concepts of finance. This is what the whole endeavor is all about. Okay? So let's start. So this is the first question. I test every investor before creating wealth, and after every question I'll also give an explanation of answers. After every question I'm going to give the answers, and I'm also going to give the explanation. So the first question is, I test every investor before creating wealth. What could the answer be? Okay, so it becomes a little difficult, but as you go, you will get to know, and then in the next 7th or 8th, you will start answering. So the answer for this is market cycle. If you have a market cycle, please circle it. Yes, please circle it. So what's the takeaway from this slide is that a market cycle, which consists of ups and downs, actually tests your patience. If you get out of markets, then you don't make money. If you get out of markets, then you don't get money. You don't make money. So that's the first. Let's move on. I'll explain this. Savings rate is nothing but what you save on your income. If your income is 1 lakh rupees, and if you save 30,000, then your savings rate is 30%. Whatever savings rate you have today will determine what will be your lifestyle after 10 years, 15 years, 20 years. If you have low saving, if your finances are in great order today, it is because you had a good savings rate in the past. And if you want to have a good savings, good wealth creation in the future, today your savings rate has to be ridiculously high. Okay? I am the biggest wealth destroyer. Lifestyle inflation. You will never know how you get caught in the lifestyle inflation. Today you want to buy this car. Your friend has bought that car and you also want to buy that car. Your income your salary went up by 10%, you increase your income by 20%. What are you doing? You are actually increasing your lifestyle, and if that goes out of control, then that is going to be a wealth destroyer for you. That's the message from this slide. Next, process that helps you evaluate your financial health just like your annual health checkup. What could be the answer? The answer is annual review. We all do annual review with you, right? You know, Happy Investors is the only firm that does annual review regularly. Every year we call you and we say that, hey, we want to do an annual review with you. That process actually helps us to check whether your finances are in track or not in track. Some of you might say, some of you keep questioning us that, आप मेरे portfolio देखते हो क्या? रोज ही देखने का जरूरत नहीं है. Once in an annual review, if you have to look at your portfolio, then I think that's enough for us to ensure that whether the portfolio is on track, whether you will be able to create wealth in the future or something has to be immediately corrected. Any four corners? Not yet? Not yet? Hoga, hoga. The more you watch me, the more you hurt yourself. The more you watch me, the more you hurt yourself. Daily NAV. We tell you that don't watch your portfolio regularly. In fact, in the last 17 years, we did not create an app. Happy Investor created its app only last month because we had lot of feedback from people saying that we need an app. The way we wanted to control your behavior is not to let you check your portfolio on your app. If you check your app regularly, I'll tell you it is definitely injurious to your wealth. Health ka I don't know, but definitely watching your portfolio regularly is injurious to your wealth. So I get many requests. Couple of days back, markets are not doing well. Some of the clients message saying that, "Eh kya hua? 2 lakh kam ho gaya, 2 lakhs have gone down." You know, this is what, but that kind of behavior will actually not help you to create wealth. So the message is that don't watch your portfolio regularly. One concept that is invisible but becomes more powerful with time. Compounding, yes, yes, right answer. Compounding is invisible but that is very, very powerful. I will explain this with an example. Let me ask you a question. Let's say I have a paper. I'll take this example here. I have this paper with me. If I fold this for 50 times, so let's say this is one fold, second fold, third fold, fourth fold. If I do this for 50 times, what is going to be the height of the paper? Can anybody guess? If I fold this paper for 50 times, so this is my first fold, second, third, fourth, fifth, sixth. On the 50th time, what is going to be the height of the paper? Any answer? So the answer is, this paper height will be the distance between Earth and Moon. Because on every fold, it is getting doubled. 2 to the power of 50 is about 4 lakh. Distance between Earth and Moon is about 4 lakh kilometers. That's the message that you will have to look at compounding your money for the next 10-15 years. You will be creating enormous amount of wealth in the coming years. That's the message. What is the most, next question, what is the most essential skill in investing? The answer is patience. If you don't have patience, you will not create wealth. If you have invested 15 days back, 20 days back, and if your portfolio is down by 1%, 2%, and if you call us and say, "Kya ho raha hai?" definitely you will not make money in the long term. We can't help you because we can't control the markets. You will have to wait patiently. You have been told that wealth creation through mutual funds happen over a period of 5 years. If you expect this in 5 weeks, you will not create wealth. That's the message for us.
So do we have a line winner? First line, second line, third
Second line. Okay. Bad behavior, time, your behavior, SIP, investor, asset allocation. Yes, correct. So Samkit Jain gets the second line. Thank you. And there's also a first line. Who is having the first line? So I hope you are all enjoying this. What we are trying to do is that rather than giving you a boring lecture that you should save regularly and invest, we are trying to help you decode this jargon in a very gamification way and make sure that you don't make mistakes and create wealth over a long period of time. So there is a third line, Sumit Mukherjee, lifestyle inflation, systematic withdrawal plan, speculation, today, CAGR, investor. First line is already done, right?
No, we are yet.
Yeah, okay. Vidhi Bagrecha, CAGR, SWP, bad behavior, investor, SIP investing, performance gauge. Yes. So 1, 2, 3 lines are done. So one more point, people who have won any one line will not qualify for full Housie. I am the money that you hope to never use, but you are grateful when life surprises you. Emergency fund. So you keep an emergency fund which is 6 months of your expenses, and that will actually take care of when there are surprises in your life. Okay. What comes in between you and your mistake? Your advisor. We will make sure that you don't make any mistakes. How much money have Indians invested in mutual funds? The size is 80 lakh crores. Totally all of you in the room and the whole country have invested 80 lakh crores. Mutual funds is bigger than PPF, mutual funds is bigger than LIC, mutual funds is bigger than all the insurance companies, mutual funds is bigger than your employee provident fund. Only 5 crore investors have invested 80 lakh crores, and these are the smartest guys who know that you don't have you don't lose your 100% of your wealth when you invest through mutual funds. So that's the tilt that we have. So we have a Housie. Have you confirmed? Okay. So Ankit Jain, one Housie done. Okay. Fine, Ankit. Thank you so much. Where is our office located? Rajaji Nagar, Bangalore. This is our office. For people who have not visited, this is where we operate from. It's a 2,000 square feet office that we operate from. What does Happy Investor specialize in? Meeting investors' goal. You have a goal, we'll specialize in helping you to meet your financial goals through mutual funds. And the last question, what is a unique strategy Happy Investor plan to save taxes worth 15,000 approximately every year? Tax harvesting. So even if you don't withdraw your money, we withdraw your money and then harvest a tax of 15,000 rupees and we deploy this back so at the end of few years, if you have to really withdraw this money for a goal, we reduce your taxes. And final question, what is the AUM that we manage? We know these questions might not come up because we are expecting Housie at around 62, 63. So we manage about close to 675 crores. That's it from my end. Thank you so much. This was just a game to actually help you make the concept of finance simpler. The most interesting session will be started after a session from now, where we already have Mr. Aditya Ghosh, who has already reached here. We'll be having this session in the next 15-20 minutes. Over to you, Kruti, for the next session.
Thank you, Deepesh. I think everybody has soaked up investment, everything about investment like a sponge. Looks like everybody is an expert right now, all because of him. Thank you for engaging and entertaining. Come on, everyone, a big round of applause to Deepesh. Did we enjoy this session? Yes, and congratulations to all the winners.